Hey, at the Dorian Way Trading Club, I'm known as the long dated option trader. Some people call those all sorts of different things. I basically call it investing without owning or having to buy anything. And I use long dated options really on underlying securities where I can earn upwards to 50 to 70% of the money that I put to work in the marketplace. So I wanted to demonstrate, my thought process on one of them today. As a matter of fact, let's take a look at Target. What you're seeing here is a 1 year picture of Target, where the low for 1 year is 137 and the high is 254. And when I switch that over to a 3 year picture, the low gets, pretty low at $890 a share, still the high of 268. This is kind of the COVID low time frame. So I look at other things, but when I set up in this particular case what I call a back ratio, some people call them put ratio spreads. I look at the charts, I look at the analyst. This in particular is basically saying hold, which for me is an opportunity because if they're saying in 1 year from now the stock is going to be flat, I can play the market on both sides. In this particular case, it's a put side. So there's the analyst basically saying it's kind of going to stay around the same time frame, not time frame, but price, if you will. Again, looking at the charts, take a look at the setup on TastyWorks I've got here, where I'm going to attempt to buy one put at the 95 and sell two puts at the 90. Here's the underlying, right? This is where it's trading. So I've got a super big win zone. And in this particular case, I've got an opportunity even for max profit if this thing falls as opposed to going the right way. So I actually can make more money with a ratio spread if it goes the wrong way. So what I do in all cases is I put all this analytical information up on a chart so that I can history wise post to the Discord channel of Dorian Way, but also go back in time and say what was I thinking. So in this particular case, here it is. Once again, there's the 95, there's the two at the 90. I've got a 95% chance probability of profit, 95 at the 50%. Pretty good return on investment here. I'm going to buy one at the 95, sell two at the 90. I had it scheduled to get 164. I might be able to get a little bit more, a little bit less, but that on T margin is 17%. On portfolio margin is 64%. Like I said, max profits if it actually moves against me. Analysts have it at 162. The low was at 90. My break even, which is very cool, is at 83.36. There's this line right up here. So let's go see on the Thinkorswim platform whether or not I can get this executed. So I've already got it set up to buy one, sell two at the 95, the January 19th, 2024. It's almost a year away. Again, that's that long dated thing. 170 is the mid, 134 is the natural. Let's press send and confirm. And let's see if we get that executed. At the 170, no, I'm gonna have to walk that down just a little bit. Let's walk that down to, well, now the mid is saying 166. Let's just be a little bit more aggressive to get this trade executed at the 160. And let's see if that'll execute. There it is. And that's how I put a put ratio spread on. Lots of more information. And what I'll do now is I'll take this trade that I documented and I'll post it to the Discord channel so all our trading club members can take a look at it. If you want to see more information, look at me at the dorianway.com. Thanks a bunch. Take care.